Welcome everyone. Thank you for joining us for today's webinar. My name is Veronica Stusco and I'm the founder and CEO of IMTN. IMTN is a leading non-profit membership organization representing money transfer operators worldwide. We would like to say thank you very much to all our members because they are the ones supporting us for all these initiatives and all the work we do. I know we have very interesting speakers and there's a lot to talk about. So I think I won't take much time and I will pass it directly to you, Mohit.
Great. Thank you, Veronica, and thank you, everybody, and welcome to this webinar hosted by IMTN. It seems sort of strange that we're hosting it on the day that England we've gone into our second lockdown, but I guess these are strange times that we're living in. But I think from a remittance perspective, the timing is perfect because World Bank has just released an updated guidance on the impact of COVID, which I think will be very useful. Feels like a lifetime ago, but I think it was only in April when the first guidance was released in terms of impact of COVID with a predicted 20% shortfall in remittances. And now at the end of this month, we have an updated one. So it'll be great to get to grips with that. And we have a great panel to discuss that. We're joined by none other than Dilip himself from World Bank. So welcome, Dilip, but also a great welcome to Peter, who's the CEO of Tunes, and Andy, who's the CEO of Mukuru. So I think we're going to get a real flavor of, a World Bank perspective from Dilip, but then also a perspective as to what's happening in the market by two of the leading sort of payment remittance organizations. So welcome to all of you. Just before we get going, as I think people who've attended this would know, we'll do a quick poll to sort of get a feel from the audience as to where they've joined from, which organization. So Veronica, if you can put that up. And if I could request the audience to just pick one answer each in terms of where are you connecting from, and then the type of organization as well. And we already have 130 plus participants, which is great. Welcome to all of you as well. You can tell that our results of this will be declared faster than the US elections.
Yeah.
And we're already 67% there. Great. I think, Veronica, we can probably close it off. Great. So if we can share the screen. Yeah, I mean, an equal Europe, Africa, almost 50% from remittance service providers, and then banks and regulators. So great. Thank you. I think it just gives everybody a flavor where everybody's joining from. So again, welcome to everybody. With that, I think if we can close the screen, Veronica. Oh, there we go. I can do it. Great. So let's start. If I could please ask our panelists to sort of take 5 minutes, and we can start with Peter, with you. Maybe you could just introduce your organization, just give us your opening comments, and then we'll go on to Andy.
Sure. Thank you. So I'm Peter de Caluwe, CEO of Tunes, originally from Belgium. I'm currently living in Singapore, so I'm the one in that list of Asia. Currently CEO of Tunes, and Tunes is a quite young company. The focus we have at Tunes is slightly different from, I would say, remittances. But we obviously are a quite large service provider for many remittance companies across the globe. Our ambition is to become the SWIFT of the emerging markets, but with a big difference that we also want to move the funds from and to emerging markets. We see many emerging markets with massive populations who are actually banked. The only difference is that the banks in the emerging markets are usually telcos, if you look at Africa, or fintech companies, if you look at Southeast Asia, etc. And we see there is nobody really making an interconnection between these players. So we started 4 years ago building a network between mobile money operators, banks, cash in, cash out networks, etc. And we do provide these services and access to the network via specific APIs. And obviously we have a very specific API for remittance companies that we, with one single integration, allow to send money instantly in mobile money accounts, in wallets, in bank accounts, in cash pickup points in more than 100 countries. But also, we also offer this network to businesses who want to do business payments. Think about an African country into a supplier of China. We also do merchant acceptance, so we allow consumers to pay on merchant websites in the opposite way, from emerging markets into Western websites. So the network is used for multiple use cases, but one of our large use cases is definitely a service provider to remittance companies, and be the plumbing business in the back end for many remittance companies. So that's in a nutshell who Tuns is.
Great. No, thank you for that, Peter. And Andy, if I can hand over to you, please.
Ahmed, thanks very much. Hello to everyone. Andy Jury, I'm the CEO of Mukuru. We are at our heart a remittances-led fintech company. We have a focus on enabling the migrant diaspora to move and use money into, within, and out of Africa. Typically, our customer is somebody who has left their home, embarked on a journey, encountered a lot of sacrifice in search of economic opportunity, to then remit money home to their loved ones and to their family for key essential services. And so one of our rallying calls is bridging borders and fueling dreams. Our heartland geographically is predominantly in Southern Africa. That's where our sort of initial growth focus was, where we built out a fairly extensive digital and physical infrastructure in order to service the needs of our customers. And more recently, trying to explode that growth across the rest of the African continent in general, bridging into and from the UK, Europe, and more recently into Asia. As I mentioned, we focus on the migrant diaspora. Typically, our customers come to us from the informal market, and so we exist in a way between the informal and formal markets from a financial services perspective. And so the construct of formal financial inclusion, enabling our customers to migrate on a journey from a point-to-point cash-to-cash transaction to one that opens them up to a broader plethora of financial services is a key construct for us, as is this construct of digitalization of elements of that value chain along the way. We have a focus on vending our services using robust digital dust-proof technologies. That's us in a nutshell.
No, great. Thank you for that. And Dilip, lastly, if I could come on to you, you don't need any introduction. I think everybody knows you, but you have a presentation, so we're all very keen to hear what your latest findings are. Over to you, Dilip.
Thank you, Mohit, and thanks to my co-panelist and to Veronica. And good morning, good afternoon, good evening to all colleagues who are joining in the audience. So I have a number of things to say, and I'll go over my main messages and some highlights fairly quickly, and we can take on any explanations in the Q&A. And there is a report that we issued last Thursday, just about a week ago. And in fact, this is the first public launch of that report. So that's the Migration and Development Brief 33, and it's called Phase 2, COVID-19 Crisis Through a Migration Lens. So I'm going to talk about migration as well as remittances, both. And, what happens to migration has direct implications for remittances. And remittances, in fact, are the motivation, in fact, the motivation for migration, people to leave and go somewhere. So my presentation would cover both migration and remittances, and I'll try to pinpoint more on remittances. So let me see if I can share my screen. Sometimes I found it challenging. So it's not that difficult on Zoom because it says share screen, so I'm going to do that. And so here I am. Are you able to see the screen?
I think, yeah, we can now.
Great. So I'm going to do the slideshow, so bear with me. And I'm going to move my friends out to the side, so you don't need to see them. Okay. So main messages from the report. I mean, the first one is we all agree, no end in sight for the COVID-19 crisis. And the second message is that new migration has almost come to a halt, but return migration, and large part of it is actually involuntary return migration, has actually increased. Remittance flows are going to decline between this year and next year, or rather compared to 2019, by 14% by 2021. So compared to 2019, this year there will be a decline of 7.2%, and then another 7.5% decline in 2021, a total of 14% decline in remittance flows to low and middle income countries. So policy responses would include support to stranded migrants, returning migrants, and to keep remittances flowing by, for example, addressing de-risking and lack of access to bank accounts. And also, very importantly, monitoring high-frequency data collection so that we at least know how bad the situation is or how good the situation is. So just one chart on the COVID-19. On the left panel, you see the new COVID cases in the Euro area and United States. And you can see it's spiking, and you know it, so I'm not going to dwell on that. But the right side panel is sort of instructive, and we reproduce this from the previous brief that we issued, report that we issued in April. This is the chart showing the Spanish flu deaths in the UK 100 years ago, right? And you can see by the way, UK is just symptomatic, but UK at that time was the center of the world, as it is probably now. So, well I don't know. That is the only chart that we could find. Surprising that such data don't seem to exist, at least in the public domain. So what you see is that the second phase, starting the fall, basically October, was the deadliest phase, and then there was a third phase in a year later. So it started in 1918, and then it went on for 2 years. 1920 was also a serious year in terms of the Spanish flu problems, deaths as well as infections. That gives us a sense of the uncertainty or risks surrounding coronavirus, and we haven't yet found the vaccine yet. So this is going to haunt us for a while, and we should keep that in mind, that risks are going to be more on the downside than on the upside. So with that, as a couple of charts, on migration and refugee movements, very little data exists in terms of high frequency data. So on movement of refugees and asylum seekers, because of the asylum applications, you do have some data, and it comes with a 6-month lag. So as of summer 2020, our summer now, this year, asylum applications plummeted. So people are not even asking for asylum anymore. And I think it is both because nobody wants to take them, and people are also very afraid of going out because of the pandemic. So refugee flows have fallen significantly. We know that internal migration also has fallen significantly, and cross-border new international migration also has come to a standstill almost. That's what we are hearing. Meanwhile, return migration is increasing because people are not getting jobs. They were stranded for a while. Businesses are shutting down. Some of them are shutting down for good, and these migrant workers are not able to come back home. So return migration is increasing. So for the first time, we will see the stock of international migrants in the world, which is about 272 million as of 2019. That number is likely to fall or register the first fall in probably 6 or 7 decades. So this is very important because it's not the new migrants who send money home. It is the stock of migrants who are out there, the stock of migrant diaspora, as the term was used earlier. They send money home, and that stock is flat. I wouldn't worry that it is falling too much. Return migration has different effects. just one point on that. Return migration, when people come home, because they're coming from richer countries and they had gone out to get money, maybe they have some savings and they will bring some money back home. So it's not clear what the impact of return migration is on remittances. Often we find that remittances actually go up when people return. So we are seeing a bit of that, but that, as you know, is a one-off thing. And that word one-off is you are going to hear a lot in my presentation, probably for a while to come. So consistent with that picture, the number of immigrants, meaning the deployment of workers, overseas foreign workers, is declining. We see that in Pakistan, we see that in Bangladesh, we see that in Philippines. In the Philippines, in April, nobody went out to pick up a job somewhere. I mean, we know that they couldn't go out as well, but it was already going on for a while. The decline was going on for a while. And that's something to keep in mind. So what the other risk factor that we see is that the stock of people, the number of refugee asylum applicants who had applied for asylum and got the application rejected, that the stock of that has swelled in Europe to 6.3 million people. And normally, about 1/3 of the people come home, return home, out of the total number of people who have been notified that they should go back home. So 2/3 actually stay. And that 6.3 million is the number of people who have been identified already by the authorities in Europe that they are not documented, they don't have the proper visa status, and they're still there in Europe. So they are potential returnees, and they are potential involuntary returnees. So that is a risk for the future. The same problem with the US is not asylum, but it is more the more enforcement of employment and visa regulations. So then we come to what we are really interested in, I think in this meeting, that the red line there shows the decline of remittances by 7.2% to $508 billion in 2020. This is remittance flows to low and middle income countries. And again in 2021, there'll be a fall of 7.5%, reaching a total amount of 470 billion in remittance flows to low and middle income countries. So just a quick point here, 2 quick points. One is that the April prediction was that remittances would fall by 20% in 2020 and then increase by 6%. So in effect, what we are saying now is that the sharp decline and then upward movement will not happen. Instead, there'll be a gradual fall and then more of a fall next year. So no recovery next year. So in effect, by the end of 2021, we are heading towards the same amount, around $470 billion. That said, foreign direct investment is falling even more. So from the viewpoint of low and middle income countries, the importance of remittances has actually risen and is going to rise even further. That is very important because as of 2019, remittance flows to developing countries not only exceeded overseas development assistance, they also exceeded the total amount of foreign direct investment flows going to developing countries. And foreign direct investment flows is falling further. Official aid is not rising enough, and remittances have become the sort of the most significant source of external financing for low and middle income countries as a whole. This is very, very important because this gets heads of states to pay attention to remittance flows. They are no longer small change to be ignored. They are there, and that's why you see it in the headlines coming out of Mexico from the words of President Obrador, and you also hear that coming out of Pakistan in the words of Imran Khan, the Prime Minister. So this is very, very important to keep in mind. So what are the main factors that lead to the fall? First is the most important thing is the crisis, economic crisis that has been caused by the COVID-19 virus. And most important factor is the employment levels of foreign-born workers. And not only there was a fall of about 21% in the employment of foreign-born workers in the United States, which is the largest host country for migrants and largest source country for remittances. The fall, the employment level did not recover for foreign-born people, has not recovered. Even now, it is down by about 12% of the pre-crisis level. For native-born workers, there is a recovery, but for foreign-born workers, there is no recovery yet. And the recovery is there, but very, very slow. Now, this is a very important point because when you compare this data from the 2009 global recession for, let's say, Spain, we found that for native-born people in Spain, again, for both native-born and foreign-born, employment levels fell. But for native-born people, in 2009, the fall was made up by 2010. So within 1 year, employment levels have recovered for native-born people. I believe maybe 2 years. But for foreign-born people, the employment level never recovered. I don't think it has recovered even now compared to 2009, 2008 crisis. This tells you that there is a structural element to employment of foreign-born workers. And this is very important for implications for remittances because migrants not only have to have a job, they also, when the job market is weak, their earnings also decline. And that is what enables them to send money. So this remains a major source of risk and also a major factor explaining the trajectory. And this also explains to all of us the relative resilience of remittances, that they did not fall by 20% as we had predicted. This is because somehow foreign-born employment did not fall as much, or rather it fell, but then it recovered rather quickly. And then there were other reasons, including the fact that initially there was a shutdown of everything, including remittance services, and everyone was locked down. So the people couldn't even travel back home and carry the money that they were carrying. So informal flows had to shift at some point to formal channels. And there was that shift from informal to formal between Q2 and Q3. And then there was, of course, the fact of, and United States chart is shown here, out of 40 million foreign-born workers, people in the US, about 3/4 actually are documented. And many of them have access to the cash transfer programs, the employment support programs that the federal government implemented. Such programs of cash transfers and social protection are there in many host countries, also in Europe and also in other parts of the world. And that some of that also kept up the flow of remittances in the later part of second quarter and the third quarter. But the important point is that in the second quarter, there was a huge fall in remittances. The other reason, so besides the economic crisis, the other reason for decline in remittance flows was that lower oil prices fell with the economic crisis. And with that, the outward flow of remittances from Russia and also from Saudi Arabia declined significantly. Russia is a huge source of remittances for the Central Asian countries and Eastern European countries. And as you know, the GCC countries are a huge source of, in fact, they are by now almost the largest source of remittances to South Asia, East Asia, and to an extent Africa, Middle East as well, particularly North Africa. So lower oil prices were the second factor. And you see that in the chart for Saudi Arabia as well. The yellow line shows the oil price, and the blue line shows, in a more steady way, less cyclical way, the evolution of remittances. And what you notice in that is that somewhere around 2015, remittances peaked and they have started going down. Mohit, how am I doing with time?
If maybe another 5-7 minutes.
All right, perfect. I think that should be fine. So this is important to remember that Saudi Arabia managed to use counter-cyclical fiscal policy to smooth the transition, but there is a structural factor starting 2015, around 2015. Remittances flows out of Saudi Arabia has been secularly falling. And this is because of their policy of trying to encourage more native-born employment, more employment of local people, local youth, and to discourage, in some sense, recruitment of foreign workers. This is not going to go away in the near future. This is very, very significant source of risk for remittance flows worldwide, actually, but particularly to South Asia and East Asia. So the third factor, so first factor was economic crisis and unemployment levels for foreign-born people. Second factor was oil price. The third one is currency depreciation effects. This is just a chart showing the ruble dollar, and you can see if the level in somewhere around January 20, so in January, the beginning of the year was 100. Now it is 28% lower against the US dollar, 28% lower. So if the person is sending $100 in ruble terms from Russia to Tajikistan, then in dollar terms, that amount is about 30% lower or 28% lower. So this is the huge source of valuation effect and risks in the dollar value of remittances received in Europe and Central Asia region. That's what you see in the numbers. So the big sort of, use a bad term, the bloodbath in the hit to remittances was second quarter. You can see across the board, wherever you have data, you see a huge fall in remittances, other than countries like Pakistan, Mexico, Dominican Republic. It was a little surprising why they did not fall as much, but I have some slides to show. Q3, third quarter, there is clearly a growth in remittances in a whole number of countries. Again, it is Pakistan, Mexico, Bangladesh. These three stand out. But if you look again through the Q2 numbers, the year-on-year growth numbers in remittances, a whole bunch of countries in Europe and Central Asia suffered, but everywhere it has been a problem everywhere. Remittances have fallen. So what are some of the one-off factors that led to these three strange cases where remittances bucked the trend? In the case of Mexico, the yellow line is showing the peso-dollar exchange rate, like the ruble-dollar exchange rate, just around February, March, lasting all the way to actually even now, but definitely until June. Mexican peso was weaker by 25% against the US dollar. And when you have a recipient country's currency going down, weakening by 25%, it means that in the eyes of the migrants of that country, their own countries, everything is for sale at a 25% discount. So they would do whatever they can to send a lot of money home. And I think that was a huge push that led to the increase in remittances in Q2, despite the crisis that we talked about. And that crisis is shown here. The red line here shows the employment level of Hispanics in the United States. Remember that most of the Mexican migrants, 95% or more, are actually in the United States. That is true about all Latin American migrants, by the way. Most of them, about 95% of the migrants from Latin America, are in the United States. So employment levels here plummeted in April, and they have not recovered. Remember, I talked about 21% decline, and then about 12% decline even now compared to pre-crisis level. So that remains a source of risk, and there is a clear distinction now or divergence between employment levels and remittances. That remittances, I think, are being held up in some ways because of the ad hoc factors like the exchange rate, weak exchange rate, and some other things, but the shift from informal to formal. But the underlying driver is employment level, and that is really weak, and it doesn't look like it is going to come back anytime soon. So that would remain the risk. So with that, Pakistan, there was a strange effect. You can see that from non-GCC sources, the green line remittances actually declined. There was a little bump, but then they declined. And then in the main increase in the case of Pakistan in remittances was from the GCC countries. And if you drill down further, then you see that in the case of the most of the increase was from Saudi Arabia, followed by UAE, and then other GCC countries. And the Saudi Arabia effect was in part because of the Hajj pilgrimage being cancelled this year. Last year, about 1.8 million people went to the pilgrimage. And this year it was cancelled. So it is the migrant workers in GCC countries, but also in other parts of the world, let's say in Malaysia, they themselves might travel for the pilgrimage, or they might send money home so that their family members can travel. And this time that money was sent home as remittances because they did not go to the pilgrimage. That, when you multiply 1.8 million with the amount that you can think about the expenses, it kind of shows that blip. But I think there is also the other factor about shift from informal to formal, plus the incentives that the governments have, Pakistan government has put in the form of Pakistan Remittance Initiative tax benefits, plus helping open foreign bank accounts for foreign workers, overseas Pakistanis. They might be helping. One has to remember one thing about fiscal incentives. You give fiscal incentives to bring remittances, it is possible that other kinds of flows will come in to take advantage of that, the incentive, or sometimes money might leave the country and then come back. So there'll be round tripping to take advantage of the incentive as well. So we have to really evaluate whether fiscal incentives really work or not. In the case of Bangladesh, which has really, really surprised everyone, I think remittances in the second quarter increased 48% year on year in Bangladesh. There was a sharp increase as well in Q3 as well. And again, part of that happens to be because of the Hajj effect that we talked about. But I think a large part of that has to do with the flooding in Bangladesh. In July, 1/3 of the landmass of Bangladesh was inundated. So that would have prompted migrants to send more money home to help families, even if they are themselves not doing that well. So that is the reason. So, but that is one of. So downside risks remain. The most important one is the employment level of Hispanic workers that remain weak. And it's not only Hispanic workers, by the way, it is all foreign-born workers. And this problem is there in Europe as well as in the GCC countries. In the GCC countries, it is also because of the Nitakat policy, the indigenization policy, or trying to encourage more employment of local youth. So that is one source of risk. The second source of risk is the weak oil price and unpredictable oil price. And you can see here, in the case of Saudi Arabia, the blue line here, how closely it tracks the yellow line, which is the current account deficit, meaning current account balance of Saudi Arabia. It closely tracks oil price. We know that. But when current account declines by 8%, 9% year on year, and there is no hope that there will be a recovery anytime soon, that begins to have implications for fiscal expenses, and that begins to then have impact on foreign employment of foreign workers. So that, and then the third risk related to that is foreign exchange risk, currency movement risk. So with that, remittances are expected to fall in all regions, less so in Latin America, but more so in Europe and Central Asia, in part also because of the ruble-dollar effect that I mentioned earlier, unpredictability of that. And these data are here in this chart, but also in the report, so you can look it up. And with that, what are we suggesting in terms of a few policy messages? One is the need for high frequency data is there now, and we really need to have that. So we are setting up an international working group to improve remittance statistics. And G20, Italy presidency that is going to start soon is already identifying a work stream on migration and remittances. So I think we will get more support from everyone about improving data. So we would reach out to you also to the industry, remittance industry, for participation, for collaboration on this. The second thing is that, strangely enough, remittance costs have not declined in times of crisis. We know that it's supply side factor. And we know also that the digital channels have been growing very fast, but actually the poor people and poor migrants and their families don't have bank accounts to start with, so forget about digital remittances and mobile remittances. Some of them have it, but not a lot. So cash is still the king, which is a very dangerous thing right now. I actually know of a case of someone who seems to have got COVID just because she was handling cash. She was a housewife. She is a housewife. So supporting remittance infrastructure has come up in a big way as a huge policy imperative. It is no longer small change in the eyes of even the heads of states now. So remittances have received the attention, and I think we will benefit from that. That said, the AML CFT requirements, especially for online transactions, mobile transactions, that has not really been relaxed. So there are roadblocks, and there are all kinds of instances of remittance processes not working, or funds getting delayed, and a lot of people just don't have access to it. So that disruption continues, and that then calls for mitigating factors like de-risking factors, whereby banks are not allowing bank accounts for money transfer companies, particularly digital players. That remains a problem, and that needs to be mitigated. And also improving access to banking for migrant workers, poor migrant workers in particular, and their families back home. That also remains a priority. So in the medium term, improving data, improving financial access, and in the long term, keep supporting efforts to reduce remittance costs. And I want to mention that with IAMTN, with Switzerland, with United Kingdom, and 30 other countries, we have done a call to action to keep remittances flowing in the short term. And I hope that that coalition and that effort continues into the medium term and into the long term. And in the end, I still remain convinced, especially after seeing remittance costs increase during this crisis, that there is a need to create a non-profit remittance platform. Thank you.
Thank you, Dilip. That was great. A lot of data and a lot of information. I wouldn't have expected anything else from a presentation by you. That's always very, very informative. So thank you for that. Just before I go to Andy and Peter for their reactions, I have a quick question for you. 20%, I guess not that steep, but it's now more over sort of 15% over 2 years, and more like 7% this year. So that's quite a movement. And you shared a number of factors. I just wonder whether when you sort of predicted 20%, could one of the big things that maybe you didn't take into account was just the sort of fiscal reaction from the government around the world in terms of the support that and the level of the support that is there, and could that be quite a big factor? And then sort of flipping that on its head, could you share with us, I don't know, just a couple of key assumptions in your new prediction of sort of 7 and 7% that, you know, underlying this sort of data, so we know as to what is this really based on? That would be quite helpful.
Thanks, Mohit. And my apologies, I think I took too long for my presentation, but this is the first time we presented the report in all its complexity. So my apologies for taking away the time from my co-panelists. Personal apologies, friends. So in our projections, the main drivers are the economic activities as proxied by the income GDP of source countries for remittances. Also, cost of living in the recipient countries, meaning that if you are a migrant in New York and you are sending money to a brother in, let's say, Bangladesh, and another brother, let's say, in London, you would send more money to London because the cost of living is higher there. So that's the other factor. So again, it's the GDP factor that determines remittance flows. The second one is employment level and income level of migrants themselves. And that in the current situation, given all the difficulties of predicting employment level and income level for migrant workers, we use a low case scenario, meaning lower case scenario for GDP forecasts or global economic outlook, as opposed to the base case. So if people say a certain economy, source country economy is going to grow or fall by most likely 5%, but there is a chance that it would fall by 7 or 8%. We take the 7 or 8% in our projection. And the reason for that is that you saw the employment levels and the income levels of migrants are much more prone to risk during a crisis compared to the native born people. And almost in any country other than the GCC countries, foreign born people are only about 25% or lower than that of the population. So that's the other important assumption. And the cash transfer programs by different countries and access of migrants to that, we don't have any data on that, and it's very difficult to model that. So that remains like an upside risk in some ways. That's an upside. Okay, so that's what the assumptions are.
No, thank you, Dilip. And I want to bring in Andy and then Peter, please. Just Andy, your reaction on, I know there's a lot of data there to sort of take in, but your reaction, and I'm particularly interested to hear what you're seeing in the market. And the one thing that really caught my eye was Dilip's comment about the increase in cost. And are you really seeing that in the markets that you operate in? Would be great to get your perspective.
Cool, thanks very much. The fascinating data, really interesting to see the sort of cyclical impacts. And I think one of the key takeaways that I have, and certainly that's true of the markets we operate in, is that you can never draw a straight line. And it's going to continue to be an interesting ride in all senses of that euphemism. The sort of markets that we play in, I mentioned our heritage and heartland is in Southern Africa. We certainly haven't seen a one-size-fits-all tale, both in terms of time sequence and also in terms of customer segments. The market was very hard hit in April, as most were. Southern Africa imposed very strict, hard lockdowns, closed the borders. And it wasn't until the end of April when most money transfer operators were deemed to be essential services in the vast majority of Southern Africa that we saw some sort of recovery. And actually that has continued to a point where our business, and as far as we can read, the formally measured markets in Southern Africa have actually rebounded to levels higher than what they were pre-COVID. But from a customer segment perspective, our hypotheses are that there's sort of three slightly countervailing impacts. At the bottom of the pyramid, so customers who were typically sending $30 to $50, once a month on average, they have effectively been acutely financially impinged. Their ability to earn a wage or make a living seems to have been washed away. And there's a vast segment of our customer base that is no longer able to send or hasn't sent in the last 6 months without deduction. That's because they are unable to. And there's a concomitant impending social need on the other side. Our core customer that sends somewhere between $50 and $150 1 to 3 times a month has actually been exceptionally resilient, even in the face of the financial adversity that the markets have seen on a whole. I think some of that is because they are innate, they are sacrificing themselves. The sort of innate purpose behind why they have migrated is to provide essential services for their loved ones back home. And so they've made a plan. And then the third thing, and a lot of this I think has to do with the fact of where we position in the market, is that we have seen an influx of new customers coming to us, largely from the informal markets, because the sort of physical movement, I suppose, of cash across borders and coffee tins or in shoes and whatnot virtually evaporated overnight with the imposing of hard lockdowns. those customers, I suppose in a way, perhaps the fullness of time will treat this event as a kind of exogenous variable that has forced people who've never really thought about alternative means of sending money home to look at alternatives, have migrated into companies such as ourselves, have had what appears to be a transformative experience because we've addressed a lot of the friction and pain points that they have grown accustomed to in sending money home informally, and stayed with us. And so that, I suppose, we only have the lens on the formal market and our sort of impact of that, but over the course of the last 6 months, have seen a sort of a growing momentum of new customers and core customers staying. And that is true both in a sort of south-south intra-African sense, but also increasingly from Europe and the UK, where our business is growing quite rapidly.
Great, thank you, Andy. Peter, if I could have your views on that, would be great.
Yeah, sure. Thank you. I think obviously we process multiple transactions for multiple purposes. So if we zoom in on the remittance segment, I confirm what Andy says. I think if you cut the sender and the receiving market in, Send has multiple ways of sending, being it cash, digital, and they have a card, they have a bank, they have a tool in the sending side. And on the other side, you have the same level. You have cash recipient, you have a wallet or a bank or a mobile money account, whatever it is. And you have, of course, different metrics. So where we saw a big spike is, of course, in everything what is destinations on bank accounts and mobile wallets and money accounts. So we saw receiving countries going in lockdown, families could not go and pick up the cash. So automatically you saw a spike in more volumes into, I would say, electronic receiver side of things. Where we saw also a spike is in new customers for our platform, so more remittance businesses. And I think it's also linked to the fact that some remittance companies have been working a long time in that same segment with cash collections in the sender market. And these go from medium-sized to large remittance companies who all of a sudden panicked and they saw their network being closed completely in a country. And how do I scale my digital now? So we obviously could provide these players with one single integration and up and running very quickly to send into bank, mobile wallets, etc. So I don't have a visibility if there is a decline in migrants. We as a company, we had I think luck that we saw a spike in new customers, remittance companies using the platform, but also that we saw a huge spike in using electronic tools to send and receive on the receive side, collect and receive it also. We have a sister company that I think it's worth mentioning. It's a company called DT1. That is active in very small remittances in the form of a mobile phone top-up and a bill payment. So it's the same concept. It's one platform, one API. You connect to it, and you can sell actually a mobile phone top-up over a gigabyte of data in any mobile operator in the world. And to give some scale, this is like remittances in the smallest form. It's like 20, 30, 40, 50 cents that you remit. To allow somebody to top up their mobile phone, and also in that company saw a massive spike even during lockdown, and I think it translated into that people start sending money into a mobile phone to stay connected, to be online, to use. It can be in the form of 1 gigabyte connection also, or a top up connection. So we also saw there a massive spike, and in all routes and all corridors, because there we have visibility for US, Mexico, we have visibility US, Latin America. So yeah, overall, I think we processed around 25 million remittance-related transactions last month, from 20 cents to the couple of $100 per sender, and I can just confirm that we as a firm have seen a huge spike, but it's more users. It's more electronic transactions, and probably, as Andy said, it's the informal channels who got also pushed into start using electronic channels.
Great, thank you.
And maybe just on the cost side, I didn't see our margin going up. I rather saw our margin stable or slightly going down. We also did a couple of government actions together, especially, for example, in Singapore, where we negotiated on both sides, receiver and sender, to put everything at zero. And I mean, these are actions to cover the COVID. It was mainly the Bangladeshi migrants in Singapore we addressed there, but it's something that I just wanted to highlight. There is also low cost electronic remittances.
Right. Yeah. No, thank you. And I think that's a good time to bring the audience in. So Veronica, if you can launch our second poll, it'd be good to get what is everybody experiencing in terms of the decline or increase in the flows of their remittances in the various markets. So Veronica, if you could launch the second poll.
Yeah, there is.
There we go. So what is the decline in the flows experienced by the various providers? If you guys would be kind enough to pick one of those options. And we'll give it a minute or so to get as many of the 150 plus attendees their responses. It's interesting. A large part of the people are actually saying so far that remittances have increased.
Yeah, it'd be an interesting correlation to see where they are operating on the markets that they work.
Right, right. We'll just wait till we get to at least 50% and then move on. Yeah, I mean, look, I think, Veronica, you can close it. It gives us a sense of, it's not changing by much. It gives us a sense of, and if we could share the results, hopefully everybody can see it. So you can see that, in fact, a significant percentage is an increase versus a decline. And then I think it's pretty much sort of under 20 and 20 to 40. So
I think we should have asked Mohit also where are they sending the money from on the period, because I guess with the different lockdowns around the world, and in some countries in Europe, North Europe, giving incentives or giving benefits for people to maintain their jobs, things like that, maybe that made an impact.
Yeah, Dilip, you don't want to revise your projections based on that poll, I guess, yet.
No way. In fact, I was just going to again reiterate that instead of hand waving and say, well, I think it's going to fall by X%, it's really important to have a hook, and that hook has to be the global economic situation. Migrants are not in isolation, so if we do that, and then you look at the gyrations in the forecasts about the global economic or global economic outlook, the surprise thing is that if for example, I look at IMF's forecast of world economy, IMF had a forecast of in April 5.9% drop in the United States. That's the US economy. In June, they revised it further to negative 8%. Then in 2020, in October, so April down by 6%, that was the projection. In June, down by 8%, that was the projection. In October is only 4% decline. So Saudi Arabia, in April, there was a decline projected of 2.3%. In June, it was 6.8%. And then it is down now in October by 5.4%. These are the projections for 2020, right? So if you have that kind of uncertainty about the global economy, which is directly linked to the uncertainty about the COVID crisis and the evolution of that, like yesterday or maybe a week ago, you didn't know that in London there'll be another lockdown. With that kind of a situation, it's very difficult to think about flows, and especially flows that are small in size. They tend to be more volatile. What I mean is that remittances are very big compared to FDI, but that's our world. For us, it is the largest thing. For the rest of the world, remittances are very small.
True. No, and I know we're running a little bit over time. So guys, bear with me, but we don't get a panel like this often, so I want to try and continue for a bit. I'm going to combine two topics, if I may, and get your reactions quickly. I'll start with you, Andy. One is digitization, and the other one is informal, movement from sort of informal to formal, both of which are quite key. And I'd love to sort of hear your views, and we can start with digital. I mean, clearly, you know, we see all these projections, these announcements by big companies of, you know, triple-digit growths and so on. I mean, last webinar we did with Daniel was, you know, we don't have a consistent definition, by the way, as an industry of what is digital. You know, if we took true digital, i.e. no cash on send and no cash on receive, I think his research has shown that less than 10% of the transactions of a very large money transfer operator was truly digital. And I just wonder what, Andy, you know, you're seeing, and then Peter, I'll get your views, and I have a different spin for Dilip on it, but kick us off, Andy, on that.
So our true digital number is probably slightly higher than that, but it really does depend on the market and the market segment that we're talking to. But we don't see a digital flow or digitalization as a binary switch. We see it as a step of incremental links in a value chain. So our key engagement with the customer, and the thing we have to do for every customer, is digitally KYC or onboard them. And once you can do that, you can treat them as a customer as opposed to a sequence of transactions. And so every customer we have in our ecosystem is digitally onboarded. We communicate with everybody digitally from the get-go. So that's a massive transformation from the experience that they have come to us from in the informal world, where they will drop their money off. There's a black hole of zero communication for 2 weeks, and sometimes the money gets to the other side. We incentivize customers, and actually their lifestyle incentivizes them to create orders themselves using simple mobile technologies like WhatsApp, like USSD, which is widely used in Africa. You can pay for an order digitally, either via our own channels and some of the other financial services products we have, integrations with mobile wallets. And it's only sort of as the very last step, once you've got people over these incremental hurdles of inertia, that we look to take people on a journey to sort of full digitalization, which is happening. But given the market we're in, our heritage being in a vertically integrated business that can undertake the cash logistics, we want to engage with the customers and walk this journey with them, as opposed to trying to wave bright, shiny objects we think they need, but they have no ability to access for some time.
And a quick follow-up on that, I've got it here as well. A question is, you know, what about sort of movement from informal to formal, given if you take a country like Zimbabwe, where you've got all these restrictions, changing sort of economic, political climate? I mean, do you see that stickiness there, or is it a temporary?
It's a great question. Perhaps a blessing. I don't know if it's a blessing or a curse, but the markets we operate in, our biggest competitor is by far and away the informal market. It's anybody's guess as to how big it is, but potentially 50%, potentially 75% of the flows in Southern Africa. We believe that COVID has created a sort of dislocation in this market, where customers have come to providers like ourselves, had a transformative experience. And statistically, if we can get somebody to stay with us for 3 transactions or more, that turns into a lifelong association. We have typically seen our new customers who have been, you know, some of us for the duration of the 8 months post-lockdown have significantly exceeded that. And so I don't know is the honest answer. I believe, given past history, that there's a strong likelihood that those people have found, you know, a great transformative solution to the traditional friction points they've had to tolerate, and will likely stay within the confines of the formal market going forward, which is awesome for you know, the ability to vend other value-adding financial services to them, where there's a far lower cost of engagement or friction.
Great, thank you, Peter. Same to you. What are you seeing, both in terms of digital and, I guess, as you're not a remittance company yourself, maybe less so on the informal to formal, but certainly share your views. Yeah,
I think, of course, we process remittance flows from Western markets into emerging markets for many remittance companies, and so remittance companies here are customers of us. We of course have an idea on who is more the traditional, I would say, remittance company with retail channels and kiosks, etc., and who is more electronic. I don't think I can share the who is doing what, because that would be not correct from my side. But we have seen.
We don't mind, Peter,
yeah.
if you would like to.
Yeah, sure. I think it's not correct. But what we see is, what I can share is a trend, of course, in the overall side, is that we have seen, I would say, remittance companies with more traditional retail channels having a big uptick in all of a sudden sending into mobile money and bank accounts recipients. So where before it was stable and slightly growing, all of a sudden you see a big uptick. What we see now, I would say, post some countries in lockdown, is that they keep on doing that, which is quite, I would say, encouraging, because it means that consumers somehow on the sender side or on the receiver side is getting used to that new way of receiving, or that new way of sending, and keep on doing it. So I think we are lucky that we have multiple remittance companies in our customer group. Some of them have indeed lost business, and some of them have increased, and that's overall we have seen an increase. One thing that I would say also on other countries, like for example Pakistan, on people going back home to Pakistan or Bangladesh, is like we also do a lot of payouts of gig economy platforms, and we see a huge spike in I would say Pakistani, Bangladeshi, these countries, and there's many other ones who are basically start delivering services, delivering products as a home worker. And you see a big spike in those transactions. So it's not a form of remittance, or if you want, it's a form of remittance, but I would say it's a Western US based who sends a photo to Pakistan to be photoshopped and gets it back as an example, or do a translation, or do this or that, and at the end it's for small amounts, but quite a significant volume again, and that's an interesting, I would say, side remark on migrants going back home. But still being able to receive some money from the other countries.
Thank you, Peter. And Dilip, a slightly different twist, if I may. I mean, this sort of rush to digitization, is this led by COVID? I mean, migrants were not waiting for COVID to happen, and certainly that's, although it's accelerated the change. But I mean, is this sticky, or is this temporary? When things go back to normal and travel is there, we start to see a shift? And what are the kind of things that we could really do as an industry, but World Bank or regulators, to perhaps tackle the key issues like digital literacy and others, the rails that don't exist today, to make sure that this is sticky and we don't go back to where we were pre-COVID?
So thanks, Mohit, for bringing up that important point. A general observation that the industry has not internalized, starting with the leading players, because I have talked to the boards and didn't see any buy-in, is that the current pricing, if you have, let's say, you pay up to $10 to send up to $500. Suppose you have a pricing like that. So up to $500, you have to pay $10. So if you send $100, you also pay $10. People wait until they have $500 to send money. So if you reduce that cost or the threshold, so if you reduce that to $5 to send, let's say, $100, I think people will send many more times, smaller amounts, but many more times, and the total amount will be larger. So it is just to say that actually the cost elasticity of remittances is greater than 1. So if you lower the price, the volume of the commission that you collect would actually go up. That is not, so just take the example of the Zoom calls. When it was costly versus when it is not. Everybody is using it, and look at the price of Zoom. The other day, my son came and said, "Have you invested in Zoom?" He's my 17-year-old. He is hearing it from his school classmates, and I had invested it, and then I got out of it, stupidly enough, and tells you that there is a basic fact: reduce the cost, and then the volume will go up, and you make more money. That is directly related to how much you can reduce the cost is directly related to the to the cost of providing the service. And digital services are uniquely placed, so well placed to provide cheap services, right? The cost of providing services should be so much cheaper. So the ecosystem is developing as well in terms of AML, CFT, KYC requirements, as well as the transaction settlement. All of that is happening. So inexorably, we are moving towards more digitalization. That is for sure. There is still the roadblock now, and this is where the politics keeps us keeps flip-flopping. As you know, even now there is a plan to reduce the threshold for KYC in the US from 3,000 to 250. There is already that plan, so that is not going to help bring down cost, move towards digital means, and bring down cost of operating for money transfer companies as well. So just to say that, yes, the move is there from moving from informal to formal, as well as moving from cash to digital is there, but it is happening slowly. And right now we have more of a problem that a lot of migrants are going to become undocumented, I think. And undocumented irregular channels will actually be used more. That would mean loss of access to bank accounts and loss of access to formal channels. So that would shift flows away from formal to informal as well in the medium term, unless the anti-immigration kind of policies change and access to digital channels is improved.
Great. And one other topic, Dilip, I want to just quickly cover with you, because in your presentation we talked about stock of migrants that really sort of, where we've all sort of been through economic recessions and so on, but migrants as a community are very perseverant. And so when economy recovers, you'll sort of see the migrants and the remittances recover. But what we're seeing now is sort of permanent migration, if I can put it that way, where people are sort of going back home. Certainly when I talk to my colleagues in the Middle East and so on, and that sort of worries me in terms of more of a long-term impact. And then also, when you look at the sort of more white-collar workers in terms of working from home now becoming quite a norm, Facebook announcing that, they're going to recruit people all over the world. There's no need for people to migrate to the US, Facebook offices or London or whatever. I mean, how does all of that, in your view, come into where we see that's got to have a direct impact on remittances clearly going forward?
So interestingly, we will see remittance as an act, as a transaction will increase. So if you are doing small remittances, like Peter pointed out, to pay the translator in Pakistan or the teacher in a refugee camp in Lebanon for teaching Arabic, you are sitting in another country. That kind of payment is not really remittances. That's actually payment for trade, payment for small trade, small services. And those payments are going to go up. So as an industry, you would benefit from it. So remittances will increase. Return migration, some of the return migrants are not coming back anytime soon. Actually, what I wonder what would happen to the worries, the desire for people to migrate. I think that has gone down significantly for now. And until travel becomes safer and there is a sense that, if you go somewhere, it would be easy, you are not going to die. I think migration pressure will be dampened for a few years to come. But the underlying factors, income gaps between countries is widening. Demographic change, that there are so many young people looking for jobs. We are talking about hundreds of millions of people joining the workforce in Africa, right? And also in South Asia. We are talking about, I think, close to 400 million people joining by 2030, if I'm not mistaken, maybe 2050 for sure. I have a number. By 2050, it was 1 billion. So it's about 400 million. They will want to, even if they have jobs, they know that by moving up, they might increase their income 10 to 54 times. So underlying factors for migration are there. And the final one is climate change. climate change is also going to cause more displacement. We don't know by what amount. Again, people are talking in hundreds of millions. So the underlying factor for remittances, because of increase in migration in the future, and because of the transactions shifting, but more online transactions, more formal transactions will be there. So the future is, again, talking about 5 years down the road. In the next 2 years, it doesn't look very good.
Yeah. Great. Well, look, I think we could carry on, all of us, for a long time. I know Andy has a flight to catch too, so I want to bring this to a close, and I really want to thank our panelists. So thank you so much, Dilip. Thank you, Andy. Thank you, Peter, for your valuable time, and thank you to all the participants. I hope you all found it as interesting and informative as I did. Apologies if not all the questions. I tried to sort of weave them into the conversation, but we'll try and get you answers if they've not been answered. We would love your feedback. Please give your feedback to Veronica on the webinar or any particular topics. And of course, if you'd like to become members of IMTN, we would of course welcome you, and please get in touch with IMTN. So once again, thank you everybody, and more importantly, stay safe. Thanks a lot.
Thank you.
Thank you. Thank you. Take care.
Audio Jungle.